Hi, I'm MJ Nodilo, President of Pathlight Investors, here with your Pathlight Insight. What I'm going to talk today with you about is what it means to be a value investor. And I'm going to use Apple, the most focused on company and largest company by market cap in the world, as an example. Apple's been in the news quite a bit lately with their much talked about and expected launch of the new iPhone 6, as well as some other offerings that they talked about the other day, namely the Apple Pay, which would allow you to use your phone as an iWallet, as well as the Apple Watch, which a lot of people have been talking about the wearables as an industry. But what we find really interesting now that Apple is back trading at above all-time highs is that if you go back 2 years, and in fact we wrote about this a lot. If you go to our website, pathlightinvestors.com, March of 2013, we wrote a piece called "Where Have All the Apple Fans Gone?", where we talked about Apple's precipitous stock decline from September 2012 through March of more than 40%, during which time people began to believe that once thought of as the most innovative and exciting company had lost their way. This is precisely the moment which value investors, which we are at Pathlight, step back and ask ourselves, well, how can expectations change so much? And with the decline in the stock price, do we think these new expectations and changes that have gone on in the company are temporary or are they permanent? And when we believe that temporary issues occur within a great company, as they did with Apple, then it's precisely those opportunities where we can step in with cooler minds and a longer term perspective and use this opportunistic happening to the advantage of our clients. And that's exactly what we did. At a split adjusted price of about $60 a share, when people were throwing Apple away, we were buying because we realized that Apple had a competitive advantage in ecosystem. And in fact, great companies don't become poor companies overnight. We knew the issues with Steve Jobs being gone and challenges with the recent launch, and that expectations become too high. But what we also saw is that expectations quickly shifted, and we knew that a company with the strength of Apple, with their track record of innovation, would do it once again. And now they have proven such. And with that, the stock is up more than 60% since that purchase price. And it wasn't because we were smarter than other people that we were able to do this. It's because we have a discipline where we seek undervalued businesses and use the market and market participants' short-term perspective when they're selling to be buying. In this case, we happen to be right that these issues were indeed temporary. And now Apple has again proven the strength of their ecosystem, the strength of their manufacturing skill set, the strength of their global reach, and are now issuing products that people are definitely seeking in great demands. Now expectations are reset, and they're reset higher. So the easy money's been made, and now we must ask ourselves, what do we do with it going forward? Now internally, we believe the demand for these new products is going to be very high, and we recognize the strength of what they bring. But we also then have to turn to fundamentals and say, okay, should we be prudent and be trimming positions? Should we capture profit? Those are issues that we're still talking about. We don't have a definitive response. But we wanted to use this recent occurrence with Apple as a teachable moment for you to say that as value investors, as patient and thoughtful investors, you need to use market comeuppance and quick shifts in great companies to buy low, which is indeed how you end up succeeding in this very challenging marketplace. Please give us a call with any questions or if you'd like to talk about Apple specifically. Thank you very much.